The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks. Welcome on back here to the Diagnostic Trading Hour. And we got the S&P right now. It is down 1.75. We have the Russell down 0.2, and NASDAQ is up 7. The Dow currently is down 47 points with oil up 32 cents. Natural gas is flat on the day with corn down 23 points and soybeans down 14. And I'm going to pull something out there. Euro dollar is down 39 pips. Aussie dollar down 157. And pound dollar is down 77 pips. Looking on over at USD CAD, it's up 48 pips right now. US franc is up 9. And we got Euro yen up 71. Pound yen up 90. And US yen up 88. Yen getting nailed across the board. And dollar is also showing some nice strength across the board. Looking on gold, we got gold right now up 12 points. Silver is currently up 4% on the day. So 1% move on gold, but a 4% move on silver. So if you're watching gold, you're watching the wrong thing today. Looking on over at copper, it is flat on the day right now. And Aussie dollar is making some definite massive moves. And saw some IMF reports and some other things that came out. And one of the sites I like to look at, one of my friends owns this site. He has put it up as just a fun project. But it's a financial juice. You can go over there and you can find, it streams constant news all day long. And it's like right here, I'll go in, I'll put in, odd right there. And pull that up for the Aussie dollar. And it talks about just different things, like the IMF released certain information. So that could be helpful in, trying to figure out sort of what's going on. And this helps me find news when I'm like, why is this happening? And, what's going on with the Aussie? It's fallen to its lowest levels right now since 2010. So, well, that right there ought to tell you something. Because maybe you don't even see that. You're looking on an intraday chart. Okay? And so you don't even see that happening. But when all of a sudden you see, well, lowest level since 2010, what does that mean? Well, that means that there are a lot of orders there. And so when it's punching through it, then, you're really, really going to see the impact on that. I'm going to pull something up. This might be a good little learning opportunity for the day. Let's check it out. See if we can get a good chart on this. I'm going to pull up the future so we can actually see some volume with it on the Aussie dollar. So let me go over here. And let's pull up, let's see what it would be right now. It would be, let's see, be 6A. I want to say 09-13. That's going to be our Aussie dollar contract right now. And then we'll go in and I'll pull up the dailies. Just have to show on the screen here in just a minute. Actually, I may go ahead and just pull up the weeklies for now. Then we'll maybe back down to daily. And I don't know if it'll get me far enough back, but I'm going to try it. And then I'm going to actually do one more change too. Instead of doing the current future, what I really need to do is I need to look at the continuous contract. Okay, so I put that in there, but the correct thing to do is look at the continuous contract. And we'll see what it gives us. Alright, so loading that one up. It may take a minute. And I can try it over here on Thinkorswim as well. I'm loaded up in NinjaTrader. We'll look at Thinkorswim. Pull that chart on up. And just want to see, what kind of volume, if any, we can notice a good pattern there that we can take advantage of. So right here we got, just 6A on Thinkorswim. And there we go. Back this thing out to weeklies. There we go. We got our 2010 contract right there. And now let's look at the volume over here. Get some pretty strong volume. The last time we broke this level right there, which is 10/3 of 2011. Okay, so let's do some little price point charts over here. So got a price point level right there. And just to line that up, so right here. Okay. And we did that. Now, we've done that like 2 days ago. We broke that level. So that was sort of a, you need to wake up and pay attention. We just made it a new low in the last, year and a half. But then, yesterday, okay, we went back and we broke the September 2013 lows right there. And then we went ahead right now, and we're working on trying to break this low right here. And we can see a couple things that we need to pay attention to. Look at this bar that we broke a few days ago. Okay, so right here, we broke the low of the bar from October 3rd, 2011. And that was a very, very high volume bar. See that volume bar right there? I mean, that's a massively high volume bar. And we had, several warning signs along the way. But, it kept coming back down right here. I mean, this was a pretty good indicator right here. Is a good support level. So you can see, like, right there was the support level. And when I look at this, and you see, like, right there again. And then you can see right here. And you can see this whole time right here. I mean, it's all these, like, it's bouncing, comes up, bounces again, goes up, comes back down, bounces again. And even though this did, like, shoot through it on this day, what I want you to notice is it closed up. It closed up above it. Okay? Came back up, bounced back down to that same range right there, that little 95, 95.75, 96.75 range. Came back up, bounced right back down to that level again. Came back up, bounced right back down to that level again, but then broke down and closed down below it. And then we had a little pause, and then yesterday we had just a sell-off, just a massive sell-off. And the volume is advancing. Okay, so notice how we have volume like right here at 316,000 contracts. And then today, we have, that's not even as big. Notice, like, that was a bigger move. This move, not as big, but still advancing volume, declining price. We're down at, we have 403,000 contracts. And that's well above, the average. You can basically just put a line about, like, right there for the average. So we're well above average. We're over double the average volume today. So we're definitely getting a nice, solid down move. This thing probably going to continue down further. I would definitely continue to have a short position on the Aussie dollar. And then fundamentally, we can go back and we can look at why. And you got to follow the charts. The fundamentals let you know the why, give you a long-term perspective. Things usually, eventually come into line with fundamentals, but you don't necessarily want to trade on them. Okay? So right here, looking over at that, we can see Australia dollar falling to its low. We got some big moves. The Euro Aussie, okay, biggest mover this quarter. The Euro Aussie, did you know that? So I was pulling this up. And the Euro Aussie actually has 1,900 pip move so far. So there, wow, that's massive. But just a big move on the Euro Aussie there. And then we got the multi-low month madness and tapering and everything else that's going on with the dollar strength that's been happening and the Aussie not being able to keep up with it. But big thing, IMF released new data on the Canadian and Australian dollar reserves, and dollar reserves came out at 1.63%. So basically just showing how much is in holdings. Okay, and are people adding or are they subtracting currencies from their reserve currencies that they hold on stock to basically be able to print their money based off of? So, but it's a lot of different reports to keep up with, a lot of different things. I like looking at the news and just seeing what's coming out and watching the fundamentals, but also you got to look at those long-term channels. And I'm a day trader. I love day trading. That's what I do. I like being flat, done, and out of the market. Okay? But I got to remember, and sometimes I forget, but I got to remember to back up and look intraday. Okay? And just got to make sure that I'm doing that each and every day, that I'm backing up and going, what's going on the weekly time frame, on the monthly time frame, on the daily time frame. Am I at new highs or lows? Because that, does have an impact on the day. Like when, we break through a major level like we did yesterday on Aussie dollar, and it goes down again all morning long. Look at this Aussie chart. It's a beautiful thing. But right on down there, we're down at 2 deviations, by the way, right now. We're sitting at 2 deviations, perfectly at that level. And what that tells me is, that's 96% of the expected move for the day. So we're probably done for today's trading session. with the Aussie dollar. And just a couple, maybe, quick lessons, quick tips, backing up. Don't forget to look at the dailies, the weeklies, and, keep your eyes just on the news. And I'm not saying trade the news. I'm saying be aware of the news. Trade the chart. Trade what you see. Don't trade what you think. But sometimes, you start seeing things go the other way against the trend. Like, the trend's up, and all of a sudden you start seeing things pull back. And it's nice to be aware, is there something that justifies this thing turning around? Okay? And if there is, then maybe I want to tighten my stops. Maybe I don't want to add into my position. And so that's why I like to, sort of try to stay on top of that and know, what's going on in the news. And then, also just sometimes it's time to, get out of a position. You see something major come up and you're like, that's not good for me. So maybe I should just go ahead and bail on this trade. And, this is it's one of the many helpful tools that I like to use every day in trading. And, the tools don't have to be huge and complex to be helpful. They don't have to be expensive, and they don't have to be coming from Bloomberg, and everything else. And, I love Bloomberg. It's awesome. I think it's the coolest terminal on the planet. I've had access to one. But, you can use just a lot of these tools you can use, and you just have to go a few more places. Bloomberg is sort of that all-in-one tool if you got the money to drop it, right? But, and it's a cool tool. But, I also find a lot of these websites serve just the exact same purpose for me. So the more advanced you want to go, the more you need tools like that. But I think I go pretty advanced, and I do okay without it nowadays. I tried it out. It was really cool for going in and doing it. If I had any question I wanted to ask, I could find the answer somewhere on there. But, at a certain point, you just learn how to find the answers wherever they're at. Well, right now we got the S&P is currently flat. Let's go ahead and check out a few deviation levels on the day at the moment and see if we can find anything in particular that might be helpful. Let's see. I want to see if there's any good trades that we might be able to place. We might have to look at them after we come back from the break here in a minute. But I'm going to start pulling them now and just seeing if I can find something that will help us. Let's see. Right. We want to find something that's just like sort of sitting right on the levels. So let me pull this chart on over here. You know what? We could look at Aussie dollar longs being at that 2 deviation level. That might be a good trade, right? So let's go ahead. Let's pull that up. I'll go ahead and get that. We'll have that ready when we come back. But if you haven't got access to it, make sure to hop over on tfnn.com, grab access to the Diagnostic Box Spread Analyzer, and you can get going from there. But I'm going to pull it up, and I'm going to look for a long Aussie dollar after we hit this 2 deviation level and see if a good opportunity may present itself for us. And we could look at spreads. We could also look at binaries. We could do premium collection or just pure trend trading on the trade. And this one, this is a pure deviation-based trade. 96%. Let's go the other way. Let's see right there. So we got that one. I'm trying to see if there's anything else that would line up this really well.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Let me go ahead and pull up the scanner, see if we can find anything that might work out well, trades that we might want to do. We could look at just Aussie dollar spreads, and I could go in and say, you know what, I don't want to risk more than $100 on a spread, and look at what potential trades exist. And I could even look at it out of the money if I wanted to, or all. We'll just select all spreads. So let's see, every buy that exists. Is there a good low-risk spread for me? I don't expect a lot of movement. I don't really expect it to fly up or fly down. I expect it to do a whole lot of nothing for the next hour, hour and a half. So that being said, there's really 2 possibilities for me. I want to use spreads when I think there's going to be a move. So if I could find something that was just ridiculously low risk and not that much movement, I might take it. But you know, even then, I mean, like this one right here is risking like $5. That's really low risk. I don't know if we're going to make it 5 pips in the next half hour. So I may just be throwing away $5 on that trade, right? So as funny as that sounds. But, and I can go up here, I can sort of narrow down my choices a little bit, put 1-to-1 on there. But that basically gives me, like, that trade right there. That's my best trade at the moment if I'm doing a spread. But again, doing spreads when I think it's actually going to move. So if you wanted to buy right now, if you thought there was a chance the Aussie dollar was going to start just bouncing higher in the next 30 minutes, then you could go in and you could trade the Aussie dollar for $5 bucks, basically $10 max there with all fees included, and with the potential to make up to $90. Now it'd have to go up like 90 pips to make $90, but that would be the trade to do. So it's already in the money. The break-even distance is next to nothing, and it'd be a perfect trade for going long. And think about that. I mean, $10. I mean, you have any idea like what you put up if you go in to do a Aussie dollar trade on the spot market? Let me go. I'll show you the actual. We'll look at a expiration premium collection trade here in a second on this. But let's see here. Where is my calendars? All right. So anyway, so we go up, and I was looking at a calculator. But basically, it's 50 divided by $9,100. So you're talking about $180, $190 bucks. You're going to go in to put that trade on. If you want to trade, if you want to go long Aussie dollar right now, that's how much money you're going to use. If I do this trade, I'm going to use like maybe $10 max on the trade. And I just click right there, and it opens it up for me. And there's the trade. And you can actually see my risk is $9 on the trade. So obviously, you have a lot more than $9 risk probably on the Aussie dollar if you're going long it. I mean, I guess you could have a 9-pip stop loss, but with the 3-pip, bid-ask spread, 1 to 3-pip bid-ask spread, it's pretty hard just to put in 9-pip stop losses and not expect to get knocked out of a trade. So, if anything, I would buy this one to hedge myself on a short. So if I want to sell the Aussie dollar right now, and I want to go short, and I thought the Aussie dollar was going to move lower, this would be like the perfect hedge, because I can put it on, cost me $9, and ideally the Aussie dollar moves down at least 9 pips, and then that hedge takes care of me as it keeps moving down. I can lock in my profits by trailing my stops on the Aussie dollar spot market or Aussie dollar futures market, and I'm fully hedged in the entire process, and then that thing expires out, but I don't care because I'm in profit. Like, that's how I would use that spread trade. So how would I use a binary trade? Let's check that out. So if I don't think Aussie dollar is going anywhere, then let's take advantage of that assumption. Okay? We'll go over here. We'll get rid of everything but the Aussie dollar and see what potential trade setups are available on it right now. So we got the Aussie dollar sitting at, we can sell at 91.35, okay, for $22. And so it'd be right up here, 91.35. Now that's pretty close. It's about 10 ticks away. But here is what I like about this trade. Okay, I can watch it. Now, we do have more time than I'm usually used to, but I'm also getting more money than I'm usually used to getting on these. So I can go in here, I can put this trade on, and for, moderately low risk on the trade, right? Place that order in. Okay, get filled on that trade, and now, if it goes down, I'll make money. So now let's go ahead, let's put a take profit in. Let's get ready to take profit in this trade. I want to, think positive, right? Let's put a price, buy back at $4. And this doesn't seem like a lot. I understand, you can do a lot more than one of these, all right? Doesn't seem like a whole lot of money. But, so we're going to put a place order in there. Now I have an order to buy the thing back at $4. And a lot of people, they're tempted to go in and buy these things for $20. Over and over and over again. And they wonder why they blow through their accounts in, days. The Aussie dollar can stay flat. It doesn't have to do anything, and I can make money. I like that. I like that scenario. It doesn't have to do anything. It could, I think it's going to go up, bounce off of this level. I mean, that's a massive 96%. But
has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so right now, going ahead and looking on over at the Aussie dollar. We did a sell on the trade. We sold for about $25, so we're doing pretty good on that right now. We have a take profit to buy it back at 5 on this Aussie dollar 91.35, 2 o'clock expiring binary over on the Nadex exchange. And the reason I like this trade is it's basically a 1-to-1 trade. So if I sold it for 25, if nothing happens, I make money. If the Aussie dollar goes down, I make money. If the Aussie dollar goes up but doesn't go higher than 91.35, I make money. Okay? So I'll make a profit on the trade. But how is it 1-to-1? Because when you look at this trade, you go, well, if you're selling for 25, isn't the sell price your profit potential? And isn't your risk $100 minus the sell price when you're selling? So if you sold for $25, you can only make 25, and that means your risk is 100 minus 25. Your risk is $75. That's not a 25% profit potential trade. I mean, that's not a 1-to-1. That's more like a 1-to-4 for reward to risk ratio. You know. Well, what I do is, there's 3 things I know about binaries. They will be worth 0 or 100 at expiration. That's 2 of them. Okay? Meaning they'll be worth nothing, or they'll be worth the full value of $100. Always. At expiration. And this is the big key. This is the big edge. When a binary strike is at the same as the underlying market's price. So when the Aussie dollar is at the same strike as the underlying market there. So right now, if we're looking at Aussie dollar, we're looking at 91.27. If it was at 91.25, we had a 91.25 strike. the price would be $50. So when the market is at the same price as the binary strike, it'll be worth $50. Why will the binary's value be worth $50 when the underlying market's at that strike? The reason is there's a 50-50 chance it's still going to be there at expiration. Right? It can move up, it can move down, obviously it can stay flat, but it's 50-50 whether it can be higher or lower. So this will be priced at $50. Now you got to add in bid-ask spread, so you may be looking at like 47.53. And you may want to add in a few dollars for just, variance and implied volatility and all that stuff. But so I like these trades because they can win really often, but also I like them because I can go in and I can do a 1-to-1. So if I can just win more than half of them, then I'm net profitable on the trades. And so I put in my take profit for $4, and Aussie dollar is really going nowhere. I mean, we've been up like $10, we've been down $5 or so far. And but I need to have my plan ready. I need to have my ticket ready. I do got to sort of babysit it. I'm working on getting an application made that will actually do first triggers OCOs. That'll work for you. That says like, hey, if Aussie dollar is greater than 91.35, then exit trade at market. But it's not done yet. So right now I got to babysit it. And, going through all these steps and having to babysit has helped me definitely learn how to manage the trades. So if it goes up there, I'm going to hop out and just get out of the trade and take my hit. And, you don't want to wait. I don't want to go, it might come back down. Don't play those games with your trading account. They don't work, okay? Because if I'll get out, I can make it back in one more trade. If I don't get out, I have to have 3 additional profitable trades just to get back to break even. So if I'll just get out, if I traded 3 more trades that were profitable, then I'll be up net 2 trades. Okay, that's say $25 a trade, I'd be up $50. But if I don't get out because I don't want to get hit, then I'm just asking to basically destroy my account. And here's the worst thing that happens to you. Okay, I think one of the worst things, if not the worst thing that can happen to a trader, is they violate their risk management rules, and it works. Okay, they trade too many contracts and they have a profitable day. They don't take their stop loss and it comes back. They add in more contracts to, dollar cost average, and they're able to get out at break even, even though they just risk like 40% of their account. Okay, the reason that's horrible when that works is because it encourages bad behavior. And one of my aunts, she's a social worker, she's a psychologist, and she talks about all the time how rewarding bad or any rewarded behavior will be repeated. Okay, and that applies especially true for us traders. Is that if we go in and we do bad behavior, if we load up on something too heavy, if we dollar cost average in and put on too much risk, if we don't take our stop losses. And out of any of those combinations or, individually by themselves, it works for us, then that is very expensive. Because you will do it again. I guarantee you will do it again, and it will not work. And, I've had days where I've made $5,000 breaking the rules, and I make another $5,000 the next day, and then another $5,000. I'm talking 3, 4, 5 days in a row making $5,000, and then the next day I lose like $20,000. Because I kept breaking the rules, and I'm like, well, it worked the last 4 days, man. I'm on fire. I'm an all-star. And then I give all the money back that I made. And I've been much easier just, taking my hits and moving on. And those other days would have worked out just fine, because part of it is you got to just stop trading. So when you're up a certain percent, you just got to stop. So, and those, obviously, I've got away from doing that, and I got to remember that. I got to remember those days, because it is so easy to break those rules. And I remember one of my mentors, he had a plaque that he put above. There's two, which now I call like the gold, silver rules of trading. But one of them that he put up above his trading computer was "Break my rules, lose my house." And I know one trader that I was working with, and it was just amazing. We worked through a bunch of stuff, and he was doing it. He was doing it right. He was calling it. He was making money. Calling the trade, just doing a great job. But then he would just get this little gambling thing going, as a card counter. And he'd start double downing and all inning and just going to town. And I mean, he'd be up $50,000 one week and down $80,000 the next week. And what's funny though is the days that he followed the rules and he didn't overextend his account, didn't double down, and didn't all in and all that, he was making a consistent $3,000 to $5,000 like almost every single day he traded. And when his bad days, I mean, it was like maybe lose $500 to $1,000, $2,000. But most days he was profitable and he was fine. It's just he would go back and then he'd start loading up and it would work. That's what would happen, is it would work for him. Then he'd make a whole lot of money. And it encouraged that bad behavior. And then he would explode his account. And he's taking some time aside right now. He's trying to decide is trading for him, because he doesn't know if he can get over the gambling mentality. I mean, he goes and he'll make $100,000 on a weekend going and card counting. And he's always searching out. He's been banned from so many casinos. He has to search out new ones. But you got to know your limits. And so he's trying to figure out. He wants to trade. He's a good trader. He's just a horrible risk manager, which means he's not a great trader. But I mean, he's good at calling it. He does it like getting in, getting out, setting, take profit, stop losses. As long as he'll just follow his rules, follows risk management, he does fine. And so that's just a reminder to you, to follow those rules, do that risk management. Don't let them stack up against you, okay? And just take the hit. It's not that bad. What's bad is when you don't take the hit, and you got to spend the next 3 trades just trying to get back to break even. And that leads to a really bad scenario, which is known as revenge trading. You do not want to become a revenge trader. Revenge traders will risk too much money. They are focused on money, and that really lies the problem that I found for myself and for other traders in the same scenario is they get in there, and I mean, that's all they're doing. They're just revenge trading the entire time. And I can sum up all those things in one thing. You're trading focused on the money. And I was talking to a trader yesterday, and he's like, well, obviously. He's like, we all trade because of the money. And he's like, that's why you trade, is to make money. And I said, yeah, but let's think about this. Let's go to a little sports analogy, okay? Football players. We got football season going to be starting up here. I can't wait. Seems like forever, but it's coming up. And they're going to play, and they want to win the Super Bowl, right? But they know, of course, to win the Super Bowl, they got to get through the playoff games. And, of course, with the playoff games, they got to win enough games to actually make it to the playoffs. And then to, of course, win a game, they got to get enough, touchdowns and make sure the other team doesn't get too many against them. And to do that, they have to have a good offense and a good defense. And to do that, they have to make each play count. So if a team wants to make it to the Super Bowl, they cannot focus on the Super Bowl. They cannot focus on the playoffs. They cannot focus on the wins. They can't focus on the paycheck they get after each game or for each playoff game or the big bonus pay they get at the Super Bowl. They have to focus on the play. Okay? They got to focus right there in the moment on that play. They got to play well. As a trader, you got to trade well. If you're focused on the money, and I mean, I tell traders all the time, hide your P&L. Hide your floating P&L. Don't over-risk your account and hide your profit and loss. Just look at the chart. Have your plan, execute it, and do what you're supposed to do. Okay? But don't look at your floating P&L. It's going to drive you insane. You're going to make decisions based on it. And your P&L, I'm sorry to break it to you, but it does not affect the chart. Okay, so it feels like it does sometimes, but it does not affect the chart. Okay, and just be very, very aware of that. Now we got another trade setting up over here that we might look at. We have a 91.25 on the other side. We could look putting that in. We can get that in for about 86.50. So now we can go the other direction, which is cool. Okay, so now we're basically putting on a butterfly by doing this trade. And now if it'll stay below, and this is it's a good thing and a bad thing. It's a little nerve-wracking, okay? Because you go in to do the contract, and now it's got to stay in between a range, okay? So that could be, a little nerve-wracked on that, but it also can help lower your cost, your expense, should a trade lose. So we're going to go here and put that up at 96. We're going to hit place order right there. And so that allows us to go in and get out of the trade, okay, if we need to, at $96. And we bought it at $84.50. We sold it at $96. So that way that trade's sitting there and ready and set up for us. So we got both of these trades on. And now what we need to do is we need to be ready, okay, to get out of this trade should it lose. You just got to assume that you're going to lose. And I don't mean assume like in the negative way. The power of positive thinking, as much as I believe in it in so many areas of life, has no place in trading. Except for, hey, it's possible and I'm going to work at it. But, you don't will the market up or down. You don't will the market into a range, okay? So you don't want to bring your power positive thinking mentality into trading. You want to bring in your power of, almost negative thinking, all right? I could lose on this trade. How much should I risk? What can I do to increase my probability? How can I keep my risk in check? And I need to assume that I will lose, so I don't risk too much. I need to assume that I will lose, so I have a risk management plan in place, okay? And that's just, you need to do that constantly. And if you'll do that, it'll help you a whole lot in your trading. And it makes a big difference for me. I hope that'll make a big difference for you as well. And, just be beneficial for everybody involved. So we're just babysitting. Literally babysitting the trade. All right, now we're right up at our strike. So what are we going to do? We're going to get out. We're going to place order. We're going to buy back. We're closing out our trade. So did we take a little bit of a hit on that trade? Yeah, that's okay though. I would rather take a hit on a trade on one side and not have to deal with it and then let the other side go. And on the other side right now, I'm up, I'm profitable. It's hedging my trade off. So that's great news. And I'm just letting this do its thing. So, take your hit, move on, let it go. And some people are like, well, what, should I get back in? Can I get back in? Yeah. If you want to get back in, I guess. So, that may be a great idea. It may not be a great idea. But, it's obviously a possibility. You could hop back in this thing at, $43.50, I guess, if you think it's going to stay there. But you're only like 2 ticks away. So you're sort of asking just to get hit over and over again. I would rather go in and take a $25 hit, make, $18 on this side. We're talking a net $7 loss. Who cares? Come back and get it in on the next trade. And sometimes I come in here and I'll show you just trades right, just blow them out. Boom, profit, 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 profit. And but also it's important to see how to take a bad trade. And so many guys don't want to show you how to take a bad trade. But that's, I think, more essential. Anybody can take a profit. But showing you how to take a loss, that's probably one of the most essential skills that you need to learn and master as a trader if you're going to be successful and trade for a long period of time. Otherwise, you are going to get lucky, take some nice profits, and then your account is basically just going to disappear because eventually that luck is going to run out. And true luck is laboring under correct knowledge. That's the kind of luck you need to be looking at depending upon in your trades. Now, could I sell again? Now, what I could do is I could sell higher. If I thought the market was still going to pause, we got 10 minutes left. I think it'll stay below 91.50 or 91.45. So I could put a trade on for that for, say, like $10. And that's a possibility right there. And that gives me a little more profit potential on a trade. Should the market stay, under that range. And so I got that trade pending right now.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. And so we're looking pretty good on the trade right here. We got a stop right there. We went in, we took our profit. And on that 91.45 trade, that would looks like it's going to expire. We're going to make $10 on that one. We got the 91.25 trade. That's looking really good. We sold it at 84.25. We're going to make $16 there. That's going to bring in $26 for us. And then we have the 91.35 that we took the hit on. Okay, so we went and we sold that one, right, for $25. We bought it back for around $55. So we lost about $30 on it. So we're about at a break even on these three combined trades. And that really is the essential piece that you want to get, is that you really got to go in when you do these trades, and you got to take your stops, because if you don't take your stops, okay, if you don't take your stops, it's going to be really difficult to make that money back. But if you will be disciplined, if you will take your stop losses on these trades, then it's a lot easier to make that money back quickly. But imagine if I would have let that thing go and I lost $70 on it, or if I try to get out now and I was down, $60 on the trade. That would take a lot more. And I know like $60 or $70 doesn't sound like a lot, but as soon as you start doing 10 contracts or 20 contracts or 100 contracts, it's going to sound like a whole lot more. Okay, and so you got to learn how to do it with the small sizes before you go to the big sizes, and you got to put the little pieces together. But that risk management in trading is everything, and I want you to be a successful trader. So to do that, you need to have your risk management in check. All right, well, that's our quick summary today, but not bad between flipping all three of those contracts around. Was able to bring in a nice little profit on the trade. And let's see here, we got what do we have that we could take advantage of as well? Maybe one or two more trades we might be able to take advantage of. But I think with just a couple minutes left to go, we probably won't just hop in those. I won't be able to carry them through with you. Let's go ahead and check out where the markets are. We'll do our quick market wrap. And I hope y'all have a great weekend here. But we got the market currently sitting over here at, what do we got? We got the S&P up 1.5. We have the Russell up 2.5. Looking over at the Nasdaq, it's up 15.5 points right now with the Dow down 19. And then oil is currently up 11 cents with natural gas up 2. Corn is up 24 or down 24.50, down 4.5%. Corn just took off. It wasn't down much at all earlier in the day when I was looking at it, so it's a massive move. We got soybeans right now down 19 points. Euro dollar is down 28, with Aussie dollar down still 135 pips on the day. That's what we've been focusing on so far. And then looking on over at pound dollar, it's down 65 pips. U.S. CAD up 29. U.S. franc up 8, Euro yen up 74, pound yen up 90, and US yen up 94 pips on the day, with gold up 14 points, and silver is now up 5%. Again, 5% on the day. It passed the 4 mark, went to 5. All right, we all have a great weekend, and stay tuned. We have another great show coming up for you, and if you haven't tried it out, hop on over to tfnn.com and sign up for the Diagnostic Box Spread Analyzer trial. Thank you.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.